Yes, Assalamu alaikum. I am Shauzab and I will be the facilitator for the session. And the question today in front of us is that there is a major housing deficit in this country. Secondly, there are climate issues, and Pakistan is one of the most climate affected regions in the world. And third is there is a financing shortfall. So, question in front of us would be that how to address all of them simultaneously while making finance available and increasing resilient households. So, if we look at Pakistan, there is a shortfall, and in this shortfall, we have to keep in mind that number of persons per household are higher, so it's close to about 6. Secondly, due to recent two climate events which affect Pakistan settlements is heat, extreme heat and floods. If you talk about 2022 floods, there were about close to between 700 to 800,000 households which were completely destroyed, and probably more than 1 million, they were substantially damaged. So it has a fiscal cost and it has impact in terms of increasing the housing deficit also. If you look towards financing, so financing is something which is rarely available in Pakistan. Total financing by June 2025, if the numbers are correct, are slightly about 200 billion, which is about slightly less than 0.2% of the GDP. So again, that's a challenge. So we'll try to address that in our session, and I will ask 3 questions from each of our panelists, which have very rich backgrounds and diverse backgrounds, and try to find out solutions that how can we address this challenge. So now on Mudassir and Imran, if you can, in one sentence, give it, and from that punchline we can move forward and start.
Yes, Assalamualaikum everyone. My name is Mudassir Khan, and I am the MD and CEO of Pakistan Mortgage Refinance Company. We have been in existence for almost 8 years, and we started supporting the housing finance sector in Pakistan, particularly the low and middle income, about 8 years ago, when we started with a zero sort of balance sheet at that time, when we received the commencement certificate and operational certificate from the State Bank of Pakistan. We are, by the way, a notified development finance institution, so come under DFI regulations of the State Bank of Pakistan. So we started from there, and now, the last year, December 2025, we closed our balance sheet at a footing of 101 billion in about less than 8 years, so 7.5 years. So that's been quite a phenomenal growth and journey in terms of expanding the housing market, particularly for the low and middle income, playing a role in terms of capacity building and training of the sector, and trying to put in efforts to improve the legal regulatory framework in Pakistan which exists for housing finance. In fact, I was just there this morning. We had a meeting in the State Bank of Pakistan, and we're looking at what regulations can be further improved in light of the current environment in Pakistan, which has now changed, and there's a lot more interest, with the interest rates declining, in terms of interest on the housing from the banking industry and microfinance industry to lending for housing finance for the low income particularly. So that's been the journey, and I'm overall a professional banker. I've been in the industry for more than 30 years, close to 35 years, and an engineer by background. So that's my introduction. Sorry, Imran.
Assalamualaikum everyone. I'm Imran. By profession, I'm a career banker. I have worked in Pakistan as well as in many other countries outside of Pakistan across a wide range of banking areas. I have headed the state-owned mortgage finance company, house building finance company over the last few years. I'm not with them anymore. But that gave me a great opportunity to actually dive deep into the mortgage finance activity that is taking place in Pakistan. And I would really want to take this opportunity today to question and actually challenge our collective intellect about the poor state of mortgage finance in Pakistan. Is it really the best that we can do? I strongly feel that we can do a lot more, especially when we look at some of the legal markets and compare themselves. Then the difference becomes even more starker. So I am looking forward to this opportunity of sharing my experiences with all the other participants, and perhaps try and understand better in terms of what we can do differently. Thank you.
Sorry, in interest of time, if we can keep it short, the Bible very short.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. I am Salahudin, the Chief of the Housing and Human Settlements of the Ministry of Human Settlements and Development, Bangsamoro Autonomous Region in Muslim Mindanao. This entity was newly created in the southern Philippines to accommodate and give autonomy for the Muslim minorities in the Philippines. So I am handling now the 6 provinces of the Bangsamoro Autonomous Region, wherein we have several projects, programs that are existing. First of all is the Darussalam Resettlement Housing Program, the Community Support Service Program. We handle also the State Management Program, the Salam Homes Affordable Housing Program, and the Bangsamoro Integrated Disaster Shelter Assistance Program. So that is how big our mandate it is. So with regards to our questions that are given with us, in relation with our topic today, we have this mandate in our ministry which says it is our duty to formulate resource mobilization strategy to raise alternative resources in developing new housing projects and efficient financing. So with that mandate that was given to us, we are able to explore many areas in developing and coming up with alternative resources in funding and in creative policies. That's all.
Assalamu alaikum everyone. I'm Abrar. I'm currently associated with the Punjab Affordable Housing Program. It's a World Bank funded $250 million program in place for the construction of 30,000 affordable small houses in Punjab province over the next 3 years. I'm also by profession a banker. I started my banking career 40 years ago. And incidentally, Mr. Imran Ahad and I started our banking careers in the same institution, which was BCCI. And I look forward to a very healthy interaction today. And I think the questions that will be discussed will add a lot of information to the audience, and also it will give us a chance to learn more from each other. Thank you.
So the question now, Mudassir, to you is that when housing costs rise, what are the real drivers in Pakistan? For example, whether that is land, construction costs, finance costs. So how do you see them?
So in terms of when the overall, see there's multiple factors of course involved when we have seen that when the financing, when the cost of housing rises, there's a contraction in the overall market of course, and that rise in the prices, there are multiple factors. Of course, inflation is one big factor of it, and of course rise in the interest rate in the economy is the second one. With the rise in interest rates and inflation, we have seen housing, of course, banks' rates rise to a level which is, as banks have been lending at a variable rate basis, which is in Pakistan there is an interbank rate, which is called the KIBOR, which is the Karachi Interbank Offer Rate, and they link the pricing for their lending to the KIBOR rates, or they are linked it to, if it's a fixed rate financing, related to PKRB rates, which is a fixed rate, whether it's an average of outstanding PIBs for the tenure, so if it's a 3-year financing or a 5-year financing or a 7 or 10 year. So we see the rise in interest rates, of course, that's a big factor in housing. Of course, the land prices rise with inflation, and so does the cost of materials, or whether it is steel or cement or wood or whatever it is. All those materials which go into, as we know, there are almost about 40 plus industries will get involved in a housing and construction sector picks up. So all those material costs which get involved in the construction of a house will go up. So it's a big challenge when these costs rise. Of course, we have seen that as a practical example in the last few years. Post-COVID also, we saw post-COVID there was a significant contraction in lending, and subsequently when we saw credit offtake, immediate credit offtake, it increased, pushed the interest rates very high. There was a substantial current account deficit, and we saw because of that exchange rate devaluation, we saw interest rates rise, and the policy rate went up to 22% in Pakistan. And as a result, we also saw a rise in inflation, which went as high as about 38% in Pakistan. And because of these factors, the cost of lending which the banks are doing increased from previously, which was at around 11-12%, jumped to 24-25%. And with that, we saw because of that, there is the banks risk increases, and they reduce while they try and manage that risk. They also reduce their lending as well, and of course the demand goes down as well. So we saw that the housing portfolio, the mortgage portfolio, which was at close to about 240 billion plus 3 years ago, it contracted in the last 2 years. It came down to about 205 billion a year before, and then 199 billion the year after. Only in the last year we have seen that reversal, with inflation coming down, with interest rates coming down from 22% down to now 10.5%. We have seen that the mortgage market has picked up again. It started picking up last year with inflation control as well. So last year we saw that the mortgage portfolio, overall outstanding portfolio, closed at almost about 240 billion. So back to almost a level which we were at almost 3 years ago. So that's the impact that we see when we have rising costs and prices in the market.
So, the question to Imran, you is that has this resilience factor, meaning the cost for building in these climate things, making resilient housing, is that become a premium feature, and how finance system is adjusting to that?
I think, Shauzab, I would like to really look at it in two very distinct components. That is the resilient financing adding to the cost of the asset. The short answer will be that absolutely yes, it is adding to the cost and the challenge of finding enough money to buy that house. But let's look at it in two different components. I would first start with what we would call the developed world, the US, Canada, UK, Western Europe. And quite clearly, what has happened that in last few years, the awareness about resilient homes and resilient communities has increased multifold because of the continuous spate of natural disasters that have hit almost all the countries. And it has resulted in many behavioral changes. So if you look at the example of the United States, especially for buyers in the upper middle income or high income groups, the preference for buying a house with eco certification or other such parameters being met has increased as a prime factor for the potential buyers to 70%, where it was only 42% about 6 years back. That has happened. What's some of the other changes that have taken place? That there is a new phenomena that is kind of coming up, which is called insurance drought. So there are certain areas, especially in states like California, Florida, where insurance companies are not willing to provide insurance to the houses because of the very clear and significant threat of natural disasters. and the demand for houses that meet those standards is increasing, which also increases the prices, so the challenge continues. Now let's come to our part of the world, Pakistan and similar other countries. I think the challenge is very different. It is not so much that the demand for resilient housing is giving rise to a concept of housing being or becoming a luxury. I think the mere concept of owning a house in Pakistan and many other low and middle income countries is considered a luxury in itself and by itself. Whether it is meeting the climate standards or not, just the ability to own a house is considered a great luxury. Obviously, there are multiple factors that are behind this issue. Pakistan, if you really look at it, why it is considered a luxury and what would be some of the factors that we should focus on. Unfortunately, the prices of houses have increased tremendously over last 20 to 30 years compared to the incomes of people. What we need to understand that when we talk about the ability of a buyer to buy a house or mortgage, there are three very distinct components. One is the price of the asset, income of the borrower, and in between comes the financing. If you look at the policy responses that we have seen in Pakistan, they are all focused at the middle component, which is the availability or lack thereof of the financing, but not so much on the price of the asset or the income. Obviously, nothing can be done about the income in the short run, but there are interventions that should be and can be made as far as the pricing of the asset is concerned. What has given rise, we have to ask ourselves, what has given rise to this accelerated increase in the assets or the housing prices? For almost last 3 decades or more, real estate has been the perfect haven to hide black money. So what it has done, that the prices of land and prices of houses, they have increased at a multiple growth rate compared to incomes of the people. So people who could buy a house 30 years back if the mortgage was available cannot buy it anymore. What it has done in multiple areas, it has forced people to go and live in communities that are not perhaps suitable. It has given rise to what I call urban slums, which supposedly nobody would call them slums, but if you really look at the quality of those houses, these are houses or apartments where walls do not have plaster or plaster does not have any paint. So these are at the end of the day urban slums. Or if you move out of some of the major urban hubs, then we are faced with the issue of rural population that is forced to live in areas that are highly susceptible to climate changes. So yes, the whole concept of owning a house which is in a decent community is becoming a luxury.
Right. So coming to you, Shauzab, because you are running a World Bank program, we're actually working with the provincial government. So are the current subsidy and system design actually supporting long-term affordability, or does it have any other impact, for example, in inflating the prices or otherwise?
Okay. So, to answer your question, let me step back a little bit and view the whole question and the equation from a supply and a demand side perspective. So, firstly, as Mr. Imran has very rightly pointed out, the cost of a house has now gone out of the reach of a common man. And what we can really readily relate to is that 20 years ago, if somebody with a middle income position in the society could afford to buy a 500 square yard house in any city, now he has come down to 1/4 of that, which is a 5 mala house. with the same income. So the income gap versus so I'm not talking about the supply, I'm talking about the affordability. So that equation has really been destroyed in plain words. What we are trying to do with the money that has been provided to us by the World Bank is that we have entered into a collaboration with the government of Punjab, and we have convinced them that a lot of land which was vacant in the province can be put to good use. And so, after a lot of discussions and negotiations, the Punjab government has started releasing a land stock to us. So for that, a specialized organization by the name of FATA, PHATA, Punjab Housing and Town Planning Agency, has been made responsible for holding that stock of land in its books. On the other side, the World Bank has actively collaborated, and therefore the Punjab Affordable Housing Program was created to design houses in such a manner that would fall within a particularly specified income group. And so the data was a key component in this entire exercise. How we obtain the data and what do we make out of that data is very critical. So once we have identified where the intervention is required to be done, in which income bracket this intervention is required to be done, we have designed the houses and the cost of those houses within and around that income group. So it will not be that those people who are in the lower middle income group will always be chasing a house. They will be given a house within their affordability level. So this is what we have done.
Right, coming to Shauzab, you, how do communities you work with define resilience from your background and from your perspective, and where does the clash, how do you sort of manage it in terms of financiers?
Yes, in our context, the Bangsamoro Autonomous Region, which is under the Philippine government, with our communities, it is really on the matter of if they are what they are availing for the house is it resilient, is the cost right for their or the design for the house is right for the cost, and what clashes is the part of the financiers. They say that this design or this house is what they can give for the price that they have financed with it or they have developed with it. So, alhamdulillah, with the creation of the ministry, which is the only government in the Bangsamoro Autonomous Region who is handling all of the housing projects in the region, we are able to formulate policies. There are policies also in the national level that we have adopted in order to fill the gaps between the clashes of the financiers and the clients that they are. So with that, we have also provided powers to explore other areas so that we can see how the cost will be lowered and lowered from the as you can see, we are not just only a regulatory entity, but we are also implementing agency for the housing. So with that power vested in ours, we can control the housing cost. Actually in the national they have 3 categories for the as Sir Abrar also mentioned that in our country we have this socialized housing that is intended for the low income marginalized communities. We have also the economic housing where for the middle income you can avail that, and we have the open market wherein the rich people can avail that. So for the socialized housing, it is only intended for the low income. It is strictly in our policy that only the low income people can avail this socialized housing.
So now moving to the financing side, what are the constraints and what are the policy issues? So what single largest constraint you feel is in terms of providing this long-term and affordable?
There are multiple constraints. First, let me just maybe for the audience give a little bit of a Pakistan problem where we are, what we people talked about rising prices and getting homes out of reach of Pakistan. Generally, people for low income category. Right? So, dilapidated sort of housing conditions are there. So, there is a deficit of housing of over 1 billion units across the globe. Pakistan, we carried out a survey about 2 years ago. Pakistan faces a housing deficit, not shortage, deficit of about 15 to 27 billion housing. Shortages, if you actually look at shortage, which is a gap in only demand and supply, that's a bit different. It's a slightly smaller number, but the number which is awfully, we carried out a survey in which that number came to 2.1 million housing units, but generally the number that is quoted in the market is about 10 to 12 million housing units. I'll come to that. Give me just 2 minutes. So I just wanted to explain that whole context. So there is, and I think there was a discussion around informal sort of housing slums. Right? So informal housing in Pakistan, which includes this dilapidated and poor condition of housing, which is informal housing. I call it informal housing. That informal housing is almost 50%, even in a city like Karachi. 50% of Karachi's population lives in informal housing. Same is the number for Lahore, which is another bigger city, the second biggest city in Pakistan. So these numbers are mind-boggling when you look at it in terms of how much of a public policy needs to change to cater to this segment. It is not just a shortage. I don't find shortage as a big issue, if you ask me personally, although I sit in a company which is supporting mortgage financing, and Pakistan's number of mortgage to GDP, as Shauzab mentioned, is only about 0.2%. Right? I look at it slightly differently. If I've done some research on it, and if you look at Pakistan, for example, I'll come to Pakistan, but let me quote you a number in the US, for example. The United States has a mortgage to GDP ratio of 127% or 122%. Mortgage to GDP of 122%. Much more than GDP is the mortgage, outstanding mortgages. And what is the home ownership in the US? Home ownership number in the US is only 67%. Now compare that to Pakistan. Pakistan mortgage to GDP is only 0.2%. And what is the home ownership in Pakistan? That's roughly what it is for the last census. Our number was at about 82%. So when we look at public policy, I think the objective of the government, central bank and the policymakers should be to encourage home ownership rather than just looking at a mortgage to GDP. That should be the big. Now coming here. So I just wanted to give it a context. And I'll come maybe towards the end, I will pose that question again, which is more important. But in terms of, the question was in terms of
Policy, or in terms of issue with cost financing, long-term and affordable financing.
Right. So I think I touched upon it in the beginning that Pakistan economy is very short-term in nature. Right? Pakistan, unfortunately, the mindset is also very short-term in nature. So our interest rate cycle is roughly about 2 to 3 years, maybe 3 years max. Right? So interest rates moves. Because of that cyclicality, nobody is willing to take that sort of an exposure on long term. Even the government are borrowing through the banking industry through the sale of Pakistan investment bonds, which are supposed to be long-term fixed rate bonds, ranging from 10 years, 15 years, 20 years. They have been launching those bonds at floating rate, which is variable. Right? So they're repriced, while it's a 10-year bond, it's repriced every 6 months. Rates are repriced. So nobody, even the government is not willing to take that sort of an exposure because they feel that if the interest rate environment changes, tomorrow something else may happen. And unfortunately, we are, in terms of Pakistan's geographical location as such, that we have faced with challenges from all different sides of our country, from different borders. Right? So, and because of that, that challenge exists. So interest rate cycle, because that shorter nature of interest rate cycle, nobody is willing to take that longer term view, and hence long-term financing is not available. Even if you want to go and price or do an interest rate swap, if you want to do that for short-term, long-term, the cost goes very high. Plus, Nobody is even willing to do that for more than 3 years. Or at max, somebody would increase the cost even further and do it at 5 years. So that's a big challenge. So the availability of long-term funding plus the pricing of that long-term risk. If I want to do a 10-year, if I want to go and borrow 10-year from the market, banks are unwilling to price. They say we don't know what the rate will be for 10 years. They are unwilling to price that risk for us. And if they say them, if I say no, I want 10-year, give me a price, they'll quote such a high price that it will become unvaluable. So market is technically forced to go short term in nature. Although we were able to borrow, so we initially had a credit line from the World Bank through the government of Pakistan for 30-year line. So we use that to manage our tenor gap. So that we managed to because of that longer term financing that we have. But unfortunately, and during the time, in terms of when there have been a few schemes. So one thing that there was a scheme from the previous government of Mera Pakistan, Mera Ghar scheme, launched by the central bank, which actually did this. So they gave fixed rate funding. They said the lending for low income housing will be fixed rate for a period of 10 years. But there will be a rate for the first 5 years and then there will be a rate for the next 5 years. So we gave 2 rates but there's a program for 10-year lending. Even there, the banks are not willing to come in with a very low margin. So government had to subsidize that. So there was a huge subsidy brought in by the government for the banks to be able to lend even for 5 years. So there was a subsidy of CIBOR plus 4%, while the banks were lending, getting a subsidy with the CIBOR rate, the short-term rate. They were lending fixed rate and they were getting a subsidy on that. Yeah. So that's what there's a big sort of an issue in terms of our.
It's more about non-availability of pricing and financing. So you think that's the largest issue right now. So Imran, the question to you is that you worked at fund banks and
recording in progress.
So why the mortgage financing penetration is so low? What is the reluctance of banks or other financial institutions to enhance that?
Shauzab, I think that's very important and perhaps the most key question. Okay, and my approach to this question is that first and foremost, we need to unlearn whatever we know about mortgage finance, especially in Pakistan, and more importantly, challenge our own assumptions that we have created that why mortgage finance cannot take place in Pakistan. And I'll take some time here. So all of us are talking about mortgage to GDP ratio being 0.2% in Pakistan. And we need to ask ourselves, what are some of the regional comparisons? And in terms of socio-economic dynamics, is the region very different compared to Pakistan? So just to share with you, the mortgage to GDP ratio in Bangladesh is close to 3%, which is about 10 times more than Pakistan. Mortgage to GDP ratio in India is about 11%, right? So we have to ask ourselves, is the socio-economic dynamic very different? Is the legal structure very different? Is the availability of long-term finance or interest rate volatility very different from Pakistan? And the answer to all these assumptions is no, it's very similar. So what has happened? Why in Pakistan the mortgage penetration is so low? And my answer to that would be that we are unfortunately suffering from what I call institutional lethargy at every specific level. Institutional lethargy within the financial industry, with the mortgage financing institutions, with the regulators, and more importantly, or equally importantly, with the policymakers. What are some of the reasons that we get to hear about the low penetration of mortgage finance in Pakistan? Let's just take a few big ones. The interest rates. The interest rates are too high in Pakistan, that's why mortgage finance cannot take place. Well, interest rates have also, over the last 20 years, have also been in single digits, but mortgage finance did not pick up. More importantly, what can be learned from other countries? There are, between 24 and 25, there are at least 6 elections in developed world that have taken place, where one of the key election agenda item was affordability of housing, availability of mortgage finance. That include Canada, UK, Australia, and even in the United States more recently there is one. And what are the interest rates that are prevailing in those countries? In US you can get a 30-year fixed rate mortgage at 6 to 6.5%. In Canada you can get a mortgage which will be fixed for 10 years at around 5.5%. In UK it is about the same. So the rates are extremely low, but the price of the asset, going back to my earlier conversation, there is an equilibrium that has to exist between the incomes and the prices of the houses that need to be bought. When that equilibrium gets disturbed, then whether the mortgage is available or the prevailing interest rates are 5% to 15%, no amount of financial re-engineering or subsidization of interest rates can make it happen where a house becomes affordable. That's a very important question that needs to be understood. Again, I will draw a comparison with one of the regional markets, which is India. In Pakistan, the total commercial mortgages today stand at around 210 billion. In India, they stand at 33 trillion Indian rupees. 33 trillion Indian rupees. The amount that has been actually refinanced by the whole system is 1 trillion rupee. So the remaining 36 trillion rupee is actually being managed by the lending institutions through their normal balance sheet management, which happens in the US, which happens in Canada. So again, this is just a mental block that we have created for ourselves, that if there is no long-term funding available, we cannot do mortgages. We don't ask that question when we are doing a 5 or 7 year loan for auto financing. We don't ask that question when the banking system per se in one shot give 1.2 trillion rupee for a 6-year tenure to the government. Then the availability of long-term funding does not become a question, because that's what we do. And here we have just built. So there are many other such mental barriers that we need to go beyond. Another comparison, that for every one mortgage borrower in Pakistan, there are about 250 mortgage borrowers in India. So we need to ask ourselves what has gone wrong, and what has gone wrong, that the main public sector housing finance institution as well as the commercial banking sector, they have just turned a blind eye. They can do auto financing, but they are shying away from the mortgage financing for perceived issues that do not exist there.
Thank you, Imran. I think. So I will actually now respect Shauzab. So from your experience, what barriers in terms of finance you have been able to address, and how in your region?
Well, this one is interesting for us because, as you can see, as I have mentioned, we are a government entity that is selling houses. So with that, our mandate is basically on service, not on profit. And to overcome also that, we have these two costing that we saw. We need to reduce. One is the overhead expenses, or the indirect cost. Number two is the profit margins. So, since we are implementing the housings in the Bangsamoro region, we have adopted national policies that are giving subsidies to socialized housing. First is we have the 4PH in the national region, which means the Pambansang Pabahay para sa Pamilyang Pilipino, or the National Housing Program for the Filipino family, wherein beneficiaries would have subsidies in terms of tax, wherein the 6% usual tax is reduced only to 1%. Then the developers are exempted also for the tax that they are when they develop the houses. So they are exempted in the tax. Another one is the faster approval of their development permits. So that carrying time is reduced. The expenses that they do it for the application is reduced also. And coming into our context in the Bangsamoro region, we also reduce the profit margins. As you can see, we only charge about 20% or less. So, if we have this house amounting to 450,000, maybe 50,000 only, or sometimes no, there's none for them because what we are in is the service. So we have also two schemes that the clients can avail for their mortgage. First is the in-house financing, whereas you pay what you bought. If the house would cost 500,000, you will pay it in 15 years without interest. Number two is there is a national housing development mortgage agency that is very successful. It is owned by the government, wherein we say if we put it on them, they will only charge 1% for the amortizations. That is how we have overcome this problem with the cost. So we drastically reduce the cost because we omit the overhead expenses and the profit are very reduced to very low amount. Yes, sir.
Okay, thank you. So coming to you, Raj, for example, if you are given a choice to do two reforms tomorrow to enhance private capital for housing market, so what that would be? And probably from your role, if they are more like in terms of land titles or construction costs, so that would be more useful for us to play.
Yeah. So I think my colleagues have adequately addressed the availability of capital and financing for the whole thing. So let me focus on the other side, which is basically related to the supply side. So supply is critical, and the cost of land itself is now adding up substantially to the overall cost of the house, and that is what is putting the whole thing away from the reach of a common man. So I think the availability of land per se in Pakistan is really not a problem. It is not making that land available for housing is the problem. So I think one of the steps, and because we are experimenting with it right now in Punjab actively. So once this model matures in about 2 years' time, people will be able to see that when the land, surplus land or unused land available with the provincial government. Why I say provincial government? Because housing under the 18th Amendment has become a provincial issue. So the federation cannot dictate to a province to make available a piece of land. So the housing policy of a province has to account for the provision of making land available for housing. So once the title, now I'm going to the title issue, while it all relates to everything that the colleagues have said, banks are hesitant because titling issue is there. And we have all seen what has happened to actually homeowners in Karachi in terms of Nasla Towers who have been living there for ages and their homes were destroyed on the orders of the government because the title was not clear. So it
Recording in progress.
it is really very, very unfortunate. So by making sure that the title is absolutely clean and clear and the construction that will take place on that land will be clear from all defects, I think that's taking care of at least one critical component of the entire equation. Secondly, if I tie this to the availability of credit and a long-term credit, I think State Bank of Pakistan has taken a commendable step recently, and they have taken out another scheme of markup subsidy scheme for housing, in which for the audience I'll give the key features, which is that for the affordable housing program, up to 2 million rupees of loan will be available for a 10-year fixed tenure at 5%. This is a remarkable rate. It puts us at a similar position where the 5% rate in UK and USA is there. And the other segment is a 3.5 million rupee loan, again for a 10-year tenure at 8%. So it is an excellent opportunity, and I think commercial banks in Pakistan and other lending agencies should make good use of this. The other point that I would like to highlight is that when we look at India, the bulk of the housing portfolio, loan portfolio, is not with the commercial banks, it's with their housing finance companies. So there are 17 housing finance companies which have shouldered the bulk of that 37 or 36 trillion rupee portfolio. 17. So those housing finance companies have been provided the adequate long-term liquidity, and therefore they operate in the communities where the affordable housing is needed the most. So I think a bit of policy intervention in Pakistan, also by the SECP and State Bank of Pakistan, will go a long way in helping this situation.
Thank you. As we are running very short of time, so I would request my panelists to give a very small or short answer for one final thing which I want to ask from each one of you. And starting with Mudassir, if we, because we are talking about blended finance, how can we effectively use that blended money as that is coming from government or any other professional sources? So, what is the area which you will actually try to target first in terms of doing that, and probably what type of instrument it can be, first of guarantees or PDF or whatever.
Yeah, so just quickly I'll comment two things. One is on the, again, the scheme
So
that
sorry
is
to interrupt you again, because I just want to wrap up for some time to the audience.
All right. So in this, I think the most effective, this is again the segment remains the low and middle income segment, which is the most where there's a bigger deficit in shortage in terms of housing, and which needs support because we read that the housing prices have gone above their reach. So that's where this subsidy and whatever it is, it needs to come in from public policy side, and there's a scheme already of the State Bank on this. But amongst the different products which exist, I feel personally, rather than having markup subsidies and refinance, these types of subsidies are not that effective. There is a limited amount of capital available with the government. The best tool to use is these guarantees, which is first clause guarantee type structures, where we have utilized that with the government, and we leverage that to more than almost 30 times. So what that does is allows the industry to lend with a smaller exposure, but take a bigger risk, right? So, if I provide a guarantee, in the previous scheme, there was a guarantee of Mera Pakistan, there was a guarantee of first up to 40%. There is a scheme in Punjab we were just talking about, in SME financing as well, by the Punjab government, which is again, where the government is providing this first clause guarantee of 20%. So you see a huge growth in SME lending across the country, but mostly in Punjab. We saw a huge growth in housing finance when this guarantee was there under NPNG scheme, despite the fact there was also markup guarantee. But first clause type of guarantee structures are very, very effective, lower cost, and you can leverage them significantly.
So first clause guarantee. If Imran, for example, if you want to design a product for informal income segments, what could be, without obviously keeping credit risk and everything in mind?
Shauzab, I think again there is a misunderstanding that financing is not available for informal income sector. HBFC does it very regularly. In fact, if you were to look at the portfolio of HBFC, then it is split evenly between salaried class and people who have some income from some businesses. And these are not very large businesses. This is what you would call very small or micro businesses. And what the institution does that they use professional income estimators, because these people literally are giving kacha receipts and maintaining everything in a register. There is no formal accounting balance sheet that you can go through, and they estimate their income and the loans are provided to them. So there is no need to actually design a new product. The same product, a regular mortgage finance that is available to a salaried person, is also available to the non-salaried income or business activity. I think what you said, that what would be the two key policy interventions or such other things. Very briefly, I feel that there is an urgent need to shift the policy focus from just reduced markup rates to actually what are some of the critical problems. And one of the most important problems is the equity that needs to be put up by the mortgage borrower. We know that we live in a country where the savings rates, historically speaking, have been very low, and rampant inflation cuts into the disposable income. There is an urgent need to provide that assistance by the provincial and federal governments, where the burden of upfront equity payment is taken away, and people can actually contribute a very small amount upfront, maybe 5% of the asset value, and the remaining is taken up by the state for a long period of time. And the other is to reduce the price of the assets, as Abrar also highlighted, that the supply of the land that is made available to the developers has to increase manifold, so that prices do not go through the roof and are well within the reach.
So, Shauzab, if we want to learn from you that what you have done and how can we borrow the example from your region to address this challenge?
Yes, basically, we have this policy that whenever we develop a housing, we are supposed to put it in a native community, whether it is for the rich people or the poor. It should be inside the native community, or what we call subdivision, because there is a policy that for every area there should be 30% allotted for open space, wherein you put the roads, the open space, the playgrounds, and you have their commercial spaces. Also, you can put reserved areas for the developers. That is why we are saying that we don't really go with the margin, because we have alternative resources, which is in, let's say, 25 acres of housing development. How many clients are living there? So they are needing groceries, water stations for drinking, laundry. So we can mobilize that to gain our alternative resource instead of putting profit on the house, on the cost, over the house.
Okay. So, Imran, can you very quickly, say in a minute or so, tell me that how climate finance can be used to increase the affordability? And maybe 1, 2, and 3.2.
I think the major component of climate finance, which by the way, according to ADB and World Bank sources, Pakistan needs something like between $200 billion to $330 billion worth of climate financing over the next 10 years to really offset the effects of the past disasters that we have faced. Suppose we can get only 1/10 of that successfully. So I think the first component that I would propose to anybody in the decision-making process would be to put that into making sure that any housing development is climate resilient, is being made with climate resilient materials. And a lot of research has already gone into it in the West. I think it is about time that Pakistan makes use of that research and puts that to practical use, because most of our construction, as you've seen in the urban jungles that we have, the houses start rotting away in 10 years. So we need to put a stop to that. So we need to invest into research and development of materials which will increase the life of the housing that we are proposing to construct for the segment of population that really cannot afford frequent renovations. If something happens to their house in a disaster, maybe super rain or something like that, they don't have the capacity to rebuild their house. So why not use materials using that climate financing which add to the durability of the house itself?
So, thank you. Thank you, all the panelists. Now I will open it to our attendants. So if there are any questions, people can raise them.
Thank you very much. I think I said 82% Pakistanis own houses. So what is the problem then? The problem is the informal housing, the kachi one. Since, for example, as you say, 50% is kachi one. So now the quantum is that people from rural areas, when their assets are eroded because of various factors, economy, they move into the urban slums. And the reason they move is that it's free land, so they can pay money some land grabber and get it, and then they build the house. So the issue Pakistan faces is not of housing, it's about housing plots, the land. And Rasa, you really pointed it out on that. That if at the policy level, if something is to be done, it is affordable land for housing. The cost of housing, construction is still affordable because it is all Pakistani materials and people would like to do that. And who are these people who are going to invest in it? People living in Kachi Wadis. So they will move out and they will create space for other landless people to come in. So it's going to be a continuum. But in this continuum, to me, I think one of the key areas which donors and perhaps governments want to look at it, that the cost of land will obviously be low as you move out into the hinterland of cities, mega cities. It can't be within the city. So, and people who would like to buy and build houses are the ones who want to be connected with the mainstream. So, transport, sir, becomes most important. Public transport, if the government provides public transport and create these links and then create these housing, affordable housing units, which can also be on a mortgage basis. Why do we want to have a mortgage for a house? One should have a mortgage of the plot. And people will be very happily provide this funding and then they will build their own house. Thank you. Any comments?
Gee, I can, I can ready.
Rather, if we can take it, then that is probably more up.
My question is very brief, like how can Pakistan develop an ecosystem? So basically, the number of solutions that you mentioned is pricing. There are individual solutions at policy levels. How can Pakistan develop an ecosystem in which all these, stakeholders contribute and basically result in affordable housing? And my second thought was that you mentioned different drivers of cost in Pakistan. Don't you think that these private housing societies like the DHAs, the big companies, they are a big factor in that? Thank you.
Very short. May we know from your experience if we do strictly in accordance with Islamic financing, the modalities of our housing financing, is this strictly Islamic? Because somehow it is disparaging.
Every planning component and the decision-making component had to come under one umbrella so that there is no disproportionate or disparate decision-making. That is what is happening in Pakistan, unfortunately. Secondly, those houses were developed on the outskirts of the main city. So each locality had about 500 houses, and very rightly so, each of those localities was connected with a road linking that locality to the main city. And the government had made it compulsory that only the person who has a legitimate job or a business in the main city was allowed to come from that locality to the main city and go back there. The planning was done in such an excellent way that if the community, the requirement of the electricity load for that community was, let's say, 1 megawatt. So the installed capacity would be 1.3 megawatts, and the surplus 300,000 kVA would go back into the grid, and the government would buy that electricity, and the revenue from that would go into the welfare activities of that community, like schooling, medicine, and the all. So every community had a green open space, like he is suggesting, and every community had a school and a dispensary and a mosque and so on and so forth. So this is one of the ways in which the government intervened in a policy level and made sure that people adhere to a certain given set of rules rather than having a free will to go anywhere they want and to build a house wherever they can.
And if you can answer the last one.
Okay. So, Shauzab, what was your exact question, please?
So my question is that beyond financial policies, what regulatory or land use intervention, as you discussed in your panel, could the government implement to reduce the cost of developing only affordable housing projects in urban sector in Punjab and Sindh?
One of the key components of price is the cost of developing that land anyway. So I think it amounts to almost 40% of the total cost. So if the government really is serious about it, then they can provide a structure where the government itself facilitates in the development of that land into a shape where a constructor or a builder can come in and start constructing. So that would take at least 30 to 40% of the overall cost of the project down at the very initial level.
Thank you.
Mudassir, can you respond to the Islamic question after one?
Okay, and I'll just also maybe just chip in into these two questions. So, Balasan, absolutely. So, I think more than the shortage, there's a need to address this informal housing and housing poverty issue. That again, in the previous scheme, MPNP gave us identification of land by the federal government, provincial governments as well. And then this scheme, there has been that. So the new scheme, I think that needs to be brought into the national housing policy, that wherever there is a project related to lower income housing and to address the informal housing segment, the government will allocate a land where you can at least shift the existing, as you mentioned as well, the population which are residing in these informal housing settlements, move to this new location where the housing is built. You allocate, you make that land available and you do new construction as well, and that cycle then goes on. So even an initial allocation of a small portion of land can help address this problem in a big way. And that's absolutely, and that needs to be, I think, brought into the national housing policy of the government of Pakistan to do that. One other component which I'll add to this is that to focus on the two things. One is the allocation and the land parcels are very limited. So we need to start focusing on verticals. In Punjab also, I think there's the focus now needs to shift towards vertical because the land parcels are small and you can bring in a lot more population into a similar piece of land. Number two, we need to also look at, because of this rural urban migration, which is again reached the level urban population has gone almost to 50%, is to focus on rental housing as well. So government needs to maybe allocate land where rental housing needs to be made available for these low people migrating from other areas into urban areas, settlements. So it could be also on a rental basis, it doesn't have to be on an ownership basis. So these are two things which I think need to be addressed as a policy matter into the segment, into the national housing policy. So in terms of Islamic, I think in Pakistan there's a lot of reluctance, of course, as you mentioned, that people do have that, particularly in the low middle income segments, have a preference for Islamic housing, and the Islamic portfolio in terms of housing finance has now increased to almost more than 50% of normal conventional housing. It's already higher than that. There is a decision of the Supreme Court of Pakistan. The central bank has also given a timeline for the entire industry to shift from conventional banking to Islamic housing. So the entire banking industry has to move now from conventional to Islamic financing, Islamic banking. The deadline so far is 2027, but I think that's a bit ambitious. It'll probably move. We're already, in terms of the assets, if you look at Islamic, there are about 35% of banking assets are in Islamic already. But that shift has to happen, and that's been mandated by both the central bank and the Supreme Court.
Imran, would you take ecosystem?
I think as far as the ecosystem is concerned, perhaps as I said earlier, that all the stakeholders, they have to come together. And when I say all the stakeholders, that includes the governments, the policymakers, the regulator, the financial industry, which includes the banking sector, as well as the just housing finance companies. We all have to come together and address the problem of the shortage of housing supply. I think there was a question that was asked from the lady at the back, and that has to be a key point, a key focus area. We have to move the policy focus away from just the financing side and the reduced and subsidized interest rates to the ability of the borrower and providing them with the support at the equity level and increasing the supply. And it is a critical time that both the federal as well as the provincial governments, they should mandate. The biggest asset that the government has is actually the land. And if they make that land available to the developers at significantly subsidized rates, but on two conditions. One, that the developer will not build a luxury house. The housing size, the unit size will not be beyond a certain parameters, and it will meet the safety and environment standards as mandated by the government. I think we can make a significant dent on the issue of availability and more importantly the affordability of the borrower to be able to buy that.
But I'll just chip in into this ecosystem. The government of Pakistan is already, there's a national housing policy which I was mentioning. So there's an effort to have a national housing policy which was there before, but it is being upgraded, revised with the industry feedback. And so all these elements of the ecosystem are in there, so that what needs to be done at the federal level, what needs to be done at the provincial level, what needs to be done to address this migration issue, rural-urban migration, green housing, affordable land. All these elements are there in the national housing policy which can be addressed. At the same time, the central bank is also looking at the entire revision of the regulatory framework as well for housing. So all these elements are there. So now whatever you said, it is actually now gelling in and will come under one umbrella in form of probably a national housing policy very soon in Pakistan. That's what's happening.
Assalamualaikum sir. Myself Cosain from Imran University of Engineering and Technology. My question is asked to how Pakistan can use blended finance and affordable funding to develop climate resilience system for people by flood, earthquakes and urban poverty.
Sorry, the last part was?
Urban poverty.
Address the poverty. Yes. So, okay. So, blended finance, because as you mentioned, there are a number of ways of looking at blended finance. So there is a subsidy which the governments can give through a markup subsidy. There's a element of viability gap fund. There are guarantee structures, first loss, and so on. So there are multiple ways of doing this blending. There's a PPP model also, apart from viability gap fund. There's another PPP model that can help. So all these mechanisms are available. I think that have been used also, for example, in terms of even the earlier scheme which you mentioned of Mera Pakistan Mera Ghar scheme. That was also done in terms of the to address this low-income poverty areas for housing from markup subsidy as well as first loss guarantee structures. Similarly, the one which is there now, which we talked about, which is called Mera Ghar Mera Ashiana scheme, which is 2 million and 3.5 million, two segments. There is a markup subsidy scheme, as mentioned, with a 5% maximum loan size and a 7% maximum loan size, and subsidy goes also to the industry in terms of banking industry to support that is. And 2 and 3.5 million, as you were suggesting, it's a very small amount. So it's very difficult to actually targeting that segment where there is an issue in terms of affordability. So that is being done, and I think those types of schemes actually help. We have seen that in India, in Pradhan Mantri Avyas Yojana scheme of Prime Minister Modi, which has been in existence for a long time now, has been very successful as well. There's been schemes in Shelter Fund, Afrique Shelter Fund has done in Africa, in Nigeria. Egypt has done similar schemes in Indonesia, Philippines. So all these countries have really done with blending finance, green finance to focus and to address the affordability issue for lower income.
So we've already gone much ahead of our time. So what we have understood is addressing this problem is not some one-off or two-off. So it's much more wholesome thing to happen, maybe on the ecosystem. And there are 2-3 things which are really pointed out. Well, so one thing obviously is this climate related issue. That is a challenge, but simultaneously it's a huge opportunity. That if we can raise right amount of climate funding, that can actually, and if it is blended efficiently, so that we can make housing affordable. Second thing, that government needs to have a proper land bank data, which then how that land can be efficiently used in terms of bringing the housing prices down. And third, in terms of policy, there's a lot which can be done in policy where actually there's no fiscal allocation made by government, but using its assets smartly and making right kind of policy changes can actually address a lot of issues. And then finally, I think as Mudassir said, first loss guarantee. So what type of instruments can be efficiently and smartly used to blend everything together? For example, what type of first loss guarantees, whether coming from government, national or provincial governments, and whether they are coming from multilateral institutions like Asian Development Bank, World Bank. So, and if there are any cheaper or grant funding that's available, how that can be funded. So so climate, although it's a challenge, but it can actually bring in as opportunity also. So thank you everyone, and thank you the panelists. It was very productive and useful discussion.